morning. Happy Monday. How you doing, my man?
I'm good.
Good to see you here. I know we couldn't get together last week, but thank you for making the time here today. Let me just start off by saying I go through analyst notes every day here. I want to take a look at what people think about the market, where they think the market's going, and all of that. And I go through 2 or 3 of your quotes per week. Of all of the analysts that we've taken a look at, without a doubt, you have been the most accurate on all of the stuff going on with the tariffs and all of that. So I'm just going to start off here pretty simply. What do you see for the market for the rest of the year here in 2025?
Well, I think I'll be up at least 20% between now and the end of the year because my earnings are growing at 58%. So that's with PE compression. S&P might only be up 12% or so because the market's still kind of narrow. You still got to be in predominantly AI and or data center related companies. The economy should get a turbo boost here as soon as the Fed gets together and starts to cut rates. We had not only 2 dissenters, we're going to have a third soon because the FOMC member that didn't show up last week just resigned. So Trump will appoint somebody that will want to cut. So we'll have at least 3 dissenters next meeting, and of course market rates have come down, and we are going to have a nice tailwind from the Fed cutting, and we are in the midst right now of a global interest rate collapse. So Treasury yields I expect to go lower. I expect the 10-year to be at 3.5% sometime next year.
Do you think it's a pretty safe bet that September we're going to get this first cut?
Yeah, right now it is. Yeah, I mean, if I was the Fed, I'd cut now.
Would you have cut in July if you were part of the Fed?
Absolutely.
Okay.
In the wake of the what happened with the payroll report, the big downward revisions, that's shocking. I realize they have seasonal adjustments, but that's ridiculous. So there was a problem, and we got to get to the bottom of it. And but the bottom line is the labor market softened, as Christopher Waller talked about. He went on Bloomberg for 30 minutes to explain this before the meeting, and so kudos to him for knowing what's going on.
Now, you had wrote last week, or perhaps you didn't write it last week, but I had read it to the group last week. Your favorite sectors post this whole tariff deal or the deals with other countries. Do you still like the Mag 7 and LNG, or what else do you like?
I like. I realized the Mag 7 had some good results. Apple was a big surprise. That was the weakest link, and obviously the AI implementers, Microsoft, Meta, were spectacular, but I like to refer to it as a magnificent one. I'm grossly overweight in NVIDIA, and it's over 16% of our portfolios, and I have no intention of selling it. I have a lot of super micro, and I think Plantair announces after the close today, and that might be one of the new Magnificent 7 stocks coming up.
Okay. Now, I'm assuming that you see 2 cuts this year. We just talked about September. I would assume that you also think we're going to get one in December. What do you see for next year then, looking ahead?
Well, it depends on market rates, but market rates should continue to meander lower. So we're in this global interest rate collapse for a very simple reason. There's a demographic problem. The world is shrinking, at least the industrial world is. So Asia has no household formation whatsoever, and it's hard to grow when you lose households. Same thing for most of Europe, except for maybe Spain, which has a lot of immigration. And it's really hard to grow your economy when you're losing households. Now, you can counteract that by immigration, but as we've seen in Britain and France and Germany, they're not able to assimilate their immigrants. Obviously, the EU might have overdone it, at least for France and Germany. So what makes America great is we're still pro-family, at least we are in the South and the Mountain West. We're still creating households. And household formation is very important for economic growth. That's why Utah is the fastest growing state in the country. And then in addition to having normal household formation, we do, have a lot of immigration, and the legal kind, of course. And those people are quickly assimilated. And I don't think Trump's anti-immigration. I think he just wants everybody to be legal and have green cards. So It's going to be very interesting, but we just have a better model than the rest of the world. We're younger. We
Mhm.
also have 50 states competing for business, which makes is very unique among any country. And that onshoring is real. The EU, Japan, and South Korean trade deals was a 1.5 trillion of onshoring, so or investment in America. So we're over 10 trillion now. So it seems to be mostly automotive, semis, and soon to be drugs. That's maybe why Switzerland is so ticked at us right now, is
Mhm.
trying to onshore their drugs and from Switzerland, Ireland, China, everywhere.
Okay, yeah, real good stuff there. Just flat out here, are tariffs causing inflation? Powell said in his last meeting it could be a one-time bump. What might be offsetting this? What's going on?
Well, first of all, Chairman Powell's not an economist, okay?
Hmm.
And only 14% of the CPI and the inflation is related to imports. And we had goods dumped on us, so that was deflationary. China's had deflation since May of 2022. It's now running at the highest annual rate of 3.6%. So that is deflationary. And then we had the lower energy prices. That was largely deflationary. And economists missed the inflation estimates for 5 straight months. So I do think we'll be fine. I think the dollar is going to strengthen here immensely from here, and just the rally in the dollar will largely offset the tariffs.
Okay, and that's you kind of touched on it right there. We keep hearing from a pocket that inflation is coming. Inflation is coming. It's coming from the tariffs. Is that true?
It did. It wasn't the first time. It's not this time. I know Howard Lutnick personally. He's a great guy. My kid
Hmm.
went to school with his kid. I knew him for some business things too. But he does want to replace the income tax with tariffs. But we are headed to 60 billion a month in tariff revenue.
Hmm.
You saw in June when we had 27 billion a month in tariff revenue, we actually had a budget surplus for the first time since 2017. So I just don't think anybody sees the big picture. When they were reconciling the big beautiful bill, they weren't allowed to use the tariff revenue. And the other reason I think Trump wanted to do, at least especially the 10% baseline tariffs, is we have a huge underground economy in America. He wanted them to pay something. So it was either national sales tax or tariffs. So we're proceeding with the tariff plan. It's not inflationary from what I can see. It is going to create a windfall of not only onshoring but tax revenue. And so I just think we ought to get with the plan and celebrate it. And it did distort GDP, of course. The imports in the first quarter was a 4.61% drag on GDP, and then the better trade number in the second quarter was over a 3% increase. I think 3.17. So it's confusing how it's distorting GDP, but it's just time to cheer up and be happy. And obviously, President Trump has a lot of opposition in Britain and as well as our American media. So it just I read that stuff and it's just scare tactics.
Yeah, and perhaps that's why you've been so spot on here. Okay, you kind of touched on this already a little bit earlier. What do you make of the firing of the BLS lead? Is this a nothing burger? Is this what do you make of this?
Well, it's Trump. I mean, it was a Biden appointee, but he wants to put his own people in. That's what Kevin Hassett just said on the
Yep.
weekend talk shows, and he has the right to do that. So, but I've always been critical of the Labor Department and their seasonal shenanigans. We knew in June something was wrong because a lot of the hiring was teachers, but then teachers get laid off in the summer. So I wasn't surprised by the downward revision, but the downward revision really surprised me. So yeah, just get rid of the damn seasonal adjustments. When January rolls around, it's like 600,000 jobs. It's ridiculous. So quit planning for seasonal hiring when everybody shops online. It's I can't fix stupid, okay? And I'm
You and
not
me
sure the
both.
new appointee of the Labor Department will be able to fix it. But you really there's something wrong. And I take Ed Yardini and Shepperson, private economists. I don't see any of the problems that Powell has warned about, and I think Powell got into a bubble. And the fact that the Fed ignored the economic data is just shocking. And I think that's regrettable. I mean, everybody wants free trade. We're going to have more free trade now because of the tariffs, because the only way you get your reciprocal tariffs knocked down was to basically have free trade. And, it just, the way Trump negotiates is so uncomfortable. It's hard to, while it's going on, it's hard to be not be confused. But the bottom line, he got what he wanted, and the tariffs aren't as bad as we thought, and it's now going to cost 10 trillion of onshoring. So we're going to have 5% GDP growth in the upcoming years.
Yeah, I think you put it perfectly there. It does make people uncomfortable, but perhaps we should just stop the hand wringing and wait and see how this all plays out here. Louis, thanks so much. Thanks for the time. Be well, okay?
Take care.